So Tesla stock in the short term is kind of looking a little like this. Now in this video, I want to go ahead and cover why I'm still bullish on Tesla on the long term. However, on the short term, there's a couple of things I think we should definitely pay attention to. Now, I do want to point out to something that I found very interesting, and that is the fact that when we look at CNBC recommendations in the past couple of days, we see that there was a lot of bearish sentiment. However, if we take a look at what Jim Cramer thought of Tesla in the short term, he was bullish, which is kind of funny because you basically never want to take the advice that Jim Cramer says. In fact, whatever he says, you want to pretty much do the opposite. Now, one of the things I mentioned in my previous video is that if we take a look into the price action of Tesla, I said if we have a good earnings, well, that'll be good, obviously, because we'll be above this area where there's a lot of resistance, where there's a lot of volume by price. But if we fall below that, well, that's really bad because there's a lot less volume by price around this, $160 level. And we could see Tesla just rapidly fall down because when there's a lot less volume in this price area, where there's a lot less exchanging going on between buyers and sellers, and so a stock could really push up rapidly up or down. In this case, if the direction is down, well, that means that we could just capitulate and just fall down very quickly, which is obviously not good, which is why, I'm not too bullish on Tesla in the short term. However, I do want to mention something a couple of things on why I'm bullish on Tesla in the long term. Now, one of the things I want to mention is that if we actually take a look into what all the other legacy auto companies are doing, they have dealerships, they also invest a lot in advertising, and Tesla basically cuts that off. Tesla doesn't have a dealership, and they also don't advertise. And if we take a look at what Tesla is doing, just in comparison as far as followers on Twitter, we see that Tesla is growing rapidly and continuously on Twitter, and we see that Tesla has almost 20 million followers on Twitter versus Ford having like 1 point something million followers, right? So you could see the big dichotomy between how many followers legacy automakers like Ford have and Tesla has, right? So it kind of shows you that Tesla really doesn't need to spend a budget on advertising when they have this huge lead in social media. And where does advertising most likely take place on? Social media. So if you have a big lead on social media organically, do you really have to spend money on, ads? I really don't think so. Now, one of the reasons why I'm very bullish on Tesla in the long term is simply because Tesla has something called pricing power, right? Now, I've said this a multitude of different times on several videos, but in the short term, it doesn't look good that Tesla is slashing its margins, right? That's what Wall Street is looking at. They're looking at margins falling below 20 when the CFO said they're gonna keep margins, 20% and above. So it doesn't look good in the short term. However, one of the things that you have to pay attention to is Tesla has a huge buffer of profit margins in comparison to the other auto legacy companies, right? And so what this means is that Tesla can slice prices and they can afford it. And what this does is it forces the other legacy automakers to slash their prices too to stay competitive. But guess what? They're not profitable right now, and them slashing their prices make it a lot more difficult to eventually become profitable. It's kind of like Elon Musk is just squeezing them out of competition, and then eventually, Tesla will succeed. Now, I want to point out to something that I thought was extremely funny on the earnings call. So there's a question that I want you guys to listen to, and then I'm going to go ahead and tell you guys why I thought it was pretty interesting and funny.
On manufacturing, you're a student of history, and
Yes.
you'll know that back in 1913, Henry Ford introduced the moving assembly line in Highland Park, Michigan. And the price of a Model T, which had already, been undercutting cars around the time, fell another 70 or 80%, and hundreds of rival car companies went bust.
Yeah.
I'm wondering if history is repeating itself here, Elon, and that the recent pattern of cuts with you is way ahead of the cost curve compared to competition, or is this? It seems like it's a calculated strategy, not just in reaction to competition or changing supply demand in the market, but could we catalyze some Darwinian forces in the EV market?
Well, I mean, we're not trying to say take pricing actions in order to be deliberately undermine competitors or anything like that. We really don't think about competitors that much. We just look at do people like our cars? How can we make the product better? Can they afford our cars? And the sort of the things like improving service and whatnot. But like I said, we do have this unique strategic advantage that we're making a car that if autonomy pans out, and we think it will, where that asset is actually will be worth a hell of a lot more in the future than it is now. So it is technically possible to sell it at zero profit, but still have the net present value of future cash flows associated with that asset be very significant.
So basically, the analyst from Morgan Stanley is saying, hey, Tesla, are you like deliberately trying to end the career of all these other legacy automakers? And I thought that was pretty funny, because I don't think you should be asking that publicly. And the reason why is because, we saw that Elon Musk kind of dodged the question saying, hey, we're not looking at competition. And to be honest, he went off tangent saying, hey, if our prices were zero, we still have FSD that could be profitable. So he kind of just switched the topic. But I feel like this was a terrible question to ask, because what did the analyst expect? Did he want Elon Musk to say, yeah, we're planning on just like ruining competition totally in the EV space? That would be bad for Elon Musk to say. Now, this is kind of what's happening, but here's the reason why there would be, this would be terrible to say. Well, we have government agencies like the FTC, who their main goal is to make sure that there's no company that has, unreasonable monopolies on just any industry, right? So if Elon was just here just saying, hey, we have this huge, deliberately evil plan to just get rid of all these other, automakers and become the only ones that could succeed in EV, that'd be bad, because then we would have government intervention. Because why would the FTC ever want just one company to do EV cars when we know that EV cars are becoming the trend? All the other legacy automakers are going to have to follow into this trend, but they're doing so unprofitably. And if they found out that Elon Musk was deliberately trying to end all these other automakers, well, that makes, Tesla become a monopoly. And of course, that would be terrible, because it would end a lot of jobs for, people that work in Ford, people that work in GM, people that work in Toyota, etc. It would, ruin a lot of jobs, especially because, we know these auto companies are trying to get into EVs. So, obviously the government would intervene and say, hey, hold on here. So I thought that was a pretty interesting question. Now, with that being said, that's pretty much why I personally am bullish on Tesla in the long term. However, in the short term, if you're going to be trading Tesla in the short term, I wouldn't be too bullish at this very moment. I think we need several more catalyst events that could really take Tesla above this 160 area. But with that being said, guys, hopefully you guys enjoyed this quick video, and make sure to watch this next video right over here. I'll see you guys on that next video. Take care, guys.